Okay, it's my pleasure here to introduce my partner Dave Mullen-Muhr to share a little bit more about this Binance news that happened about a couple weeks ago now. Dave, take it away.
Thanks, Zach. Thanks for attending, everybody. So, like Zach said, we'll be talking about the Binance action, also the action against CZ, and just talk a little bit about what that means for the near and long-term future of blockchain and cryptocurrency. So we'll start with the actions against Binance, which are separate from the actions against CZ, the individual, and then look at the short, long term, and then also discuss specifically for unbounded capital and our LPs, what this means for our portfolio. So the Binance violations, so this is all against Binance, the parent company, with all these subsidiaries underneath it. They pled guilty to criminal and civil charges for willful violations of the Bank Secrecy Act, which requires U.S. financial institutions to aid the U.S. government in preventing money laundering. They also pled guilty to failure to register as a money transmitter, which is required as an exchange, and violations of the International Emergency Economic Powers Act, which is basically just broad executive powers that gives the US government the ability to respond to unusual or extraordinary threats as they pertain to national security, which includes the US economy. So for the purposes of Binance, that had to do with dealing with sanctioned nations primarily. The penalties that the US government and Binance agreed to were $4.3 billion in monetary penalties, which is not the largest, but it's on the list. It's a historically large penalty. They also have to remediate and enhance their AML KYC and other compliance programs, which is kind of a nice way of saying, institute those programs in the first place. And then I think the most significant element is the independent compliance monitor, which is going to have or grant the US government kind of a spot looking over the shoulder of Binance for the next 5 years. This is an interesting quote from the DOJ press conference, quoting a Binance compliance employee who put this in writing, which is, always a good decision. "We need a banner. Is washing drug money too hard these days? Come to Binance. We've got cake for you." So I think that really speaks to the willful part of the willful violations element. Secondarily, CZ also personally pled guilty to a few criminal and civil charges, failure to maintain effective AML procedures, and then also the willful violation of the Bank Secrecy Act. So his penalties are resignation as the CEO of Binance. He can't be associated with the company at all moving forward now. He paid a $50 million penalty, or I think he's set to pay that. I don't think it's actually been paid yet. And he faces up to 10 years in prison. So this isn't just, a slap on the wrist. This could end up being very significant jail time, plus 3 to 5 years of supervision after whatever sentence he gets ends. If you didn't catch the DOJ press conference, some of the highlights, obviously they kind of went over those elements of the guilty pleas, but some other things worth noting. This is a coordinated effort by the DOJ, FinCEN, OFAC, and the CFTC. So if you've been following Unbounded Capital and are covering, how the regulatory environment is in blockchain and crypto and where we see it going, all of these agencies pop up quite a bit. OFAC largely in our writing and also presentations on court-ordered Bitcoin, which Zach will drop in the chat if you haven't looked at that. That is, I think, aging well with this news. Some interesting quotes from the press conference are that Binance allowed money to flow to terrorists, cyber criminals, and child abusers through its platform. So I think a lot of people in the blockchain and crypto space, they kind of use euphemisms and talk about the more gray area crime that's enabled by the technology. But I think the US government really focusing on the, kind of worst case scenario stuff puts into perspective the consequences of creating a platform that is kind of catered to criminal activity. Today's charges and guilty pleas combined with more than $4 billion financial penalty sends an unmistakable message to crypto and DeFi companies. If you serve US customers, you must obey US law. I think the inclusion of DeFi in there specifically is very interesting since Binance is not a DeFi company. So that's noteworthy. And then the last interesting quote is, this prosecution is a warning that companies that do not build sanctions compliance into their services face serious criminal penalties, as do the executives who lead them. So, I think this is kind of a sign of things to come. We'll talk a little bit more about the shift that I think this is a harbinger for, but very explicit that you need to comply and build services that are able to comply with US regulations. So the requirements of the settlement are interesting. The devil's always in the details. So this is for the Binance guilty plea. So it's not just like a simple matter of paying this 4.3 billion and then moving on, which is, I think, how a lot of people read the headline. There's really, really stringent obligations pertaining to this independent compliance monitor, which I think are going to be onerous, revealing, and could be potentially incriminating for crimes which this agreement doesn't cover. So the monitorship is going to last 5 years, could end early, but that's the maximum is 5 years, during which time they will have to evaluate the effectiveness of new compliance provisions at Binance, assess and monitor senior management's commitments to compliance provisions, and then I think most importantly, conduct a suspicious activity report look back for all transactions between the 1st of January 2018 and the 31st of December 2022, and report all the findings to FinCEN. So the suspicious activity report has to do with, this is something that Binance should have been doing the whole time and any bank will do. So large transactions over $10,000, transactions kind of from suspicious origins, certain jurisdictions, these all have to be flagged and reported to the US government. So having to go back and do 5 years worth of those, I think is going to be very revealing with the US government kind of along for that process the whole time. The monitor, which is going to be independent, so Binance can basically pick, but they have to get approval from the federal government of their choice. So that monitor has a pretty broad obligation to report any newly discovered unlawful activity of Binance or its executives to the federal government. And then FinCEN can, in its sole discretion, determine whether Binance complied with the requirements, and they can always choose to take additional actions if they deem it appropriate. So it's still, this is a good development, I'd say, for Binance, but they're still in a very vulnerable position, largely depending on how criminal or legitimate the last 5 years of Binance operations were. So what doesn't the settlement cover? I think this is kind of the key thing. So they didn't just get out of jail free card. It's not like any malfeasances in the past are covered carte blanche by this agreement. So it specifically is they settled things relating to or arising from the conduct in the statement of facts or the information field pursuant to this agreement. So that's, the Bank Secrecy Act violation, the failure to register as a money transmitter violation, those things. So the federal government or this agreement does not provide any protection against any prosecution or other proceeding relating to obstruction of justice, perjury or false statements, crimes of violence, or violations of Chapter 113B of Title 18 of the US Code, which is terrorism, or violations of any provision of Title 26 of the US Code, which is internal revenue. Both of those kind of notoriously broad areas of law. So what is the impact of the Binance settlement? I think short term, for both buyers and sellers of tokens that leverage Binance, I think it's largely unknown. So it's going to depend on the extent to which Binance was legitimate or illegitimate. So if Binance was mostly legitimate, they just had, these lax AML KYC policies, but everything that was happening on the exchange was more or less above board, then I would expect, pretty little impact. I think volumes, active accounts, all the core metrics of an exchange should be largely unaffected. If Binance was largely illegitimate, then I think we see huge drop-offs in these metrics, as it'll be much harder to kind of, act badly with a government over their shoulder. I do think it's also possible that a large percentage of otherwise legitimate activity will move elsewhere, just because a lot of people in the blockchain and crypto space are not going to be thinking too kindly about the government having a really transparent view into their dealings on the exchange. So I do think buyers, sellers of legitimate token offerings which have organic demand, they'll benefit from this reduced risk of a major liquidity provider disappearing potentially. But I think buyers and sellers of illegitimate tokens with inorganic demand that may have once relied on Binance as a way to, do pump and dumps or other less savory things, they're going to have to seek less regulated exchanges moving forward to do that stuff. So what's the longer term impact? I think that's the more interesting thing, and obviously, largely unknown, but I think it's going to be a major boon for those focused on blockchain for its utility in regulated contexts. So a very hot topic right now is tokenization of real world financial assets. Unbounded Capital has long been interested in business models leveraging blockchain for utility, but not, being so interested in leveraging speculative trading of tokens. And I also think it's kind of tangential to the action here, but I do think the move of a more regulated blockchain ecosystem with core infrastructure providers realizing that they're operating in a legal context is also very good for practical recourse for victims of loss or theft. If you watch the webinar on court-ordered Bitcoin that we did, I'll get a little bit more into the details of what that looks like. I think this is a negative development for market participants that are primarily focused on anti-law use cases or speculation. So since its origin, the blockchain and crypto space is very crypto-anarchist in nature. A major value proposition since kind of the inception of Bitcoin has been the ability to operate outside of legal context. I think this is a major pivot from that being a viable, put forward as a viable value prop of the technology. And I think that will diminish to zero over time. This is not a new point of view. We've been talking about this for a long time, but I think this is a major milestone on that path. Pump and dump token frenzies, I think, definitely suffer from oversight and regulation. So Binance is now, not really a friendly exchange for that type of activity moving forward. And I think more exchanges are going to follow suit. This is also, I think, and this maybe is the most interesting element, is this is potentially a hugely negative development for Tether, who is now presumably going to be kind of retroactively involved in this oversight, with all these suspicious activity report lookbacks. The US government's going to have a very detailed view into the flow of funds through Binance. A lot of that, kind of touches Tether. So I think we haven't gotten a good audit or accounting of how Tether really functions in a detailed way. And this might be a view into that operation, not just Tether, kind of any of these less audited players in the blockchain space. But I think Tether's probably the most interesting. And for more, really speculation, but some interesting speculation on that topic, check out our Unbounded Capital webinar with Jack Pitts from a few weeks ago. So what does this mean for Unbounded Capital if you're an LP or just interested in what we're up to? I think we're very unique relative to our peers in the blockchain space in that we've for a long time focused on investing in just equity of early stage companies that use blockchain to solve real world problems. But we've avoided business models that are dependent on speculative trade of crypto tokens. So, companies like Tokenized, DXS, Unisat, which are in our portfolio, I think that they're totally unaffected. I think this is a shift in a positive direction for them as, more mind share, more investor dollars, more interest in the above board activity of, how do we use blockchain to actually benefit the internet and benefit everyone's lives, and less focus on the crypto casino, which Binance was right at the center of, is a great thing. Two of our more kind of crypto-y companies in our portfolio, I think they benefit from this also. I think an above board version of Binance is a great thing for companies that may have tokens that they are selling. So Aldea is a layer 1 blockchain, may have a token. One of our first investments from our first fund, Masa, has a token listing soon. So being able to access a bunch of liquidity on an exchange that's operating above board is obviously a big benefit to those companies should they launch tokens. The most direct takeaway from reading over these plea agreements and all the legal action documents is that the world, I think, is just pretty clearly moving closer to Unbounded Capital's vision of blockchain technology. By far our most contrarian position, which is kind of core to our decision-making and our view of the future of the technology is that decentralization, as commonly used in the space, is really not a value proposition of blockchain technology, or it shouldn't be at the very least. Usually decentralization is a euphemism for the ability to operate outside of law. And I think this is another data point that actually this technology is not very good at that. And it shouldn't be kind of the central value prop of what you're doing with blockchain technology. And I think if people start asking themselves that, then the obvious question is, well, if blockchain is not valuable because of decentralization, then why is it valuable? I haven't seen a compelling answer to this question from most of our peers in the space, but I think that Unbounded Capital is a very, very clear answer, and that's, blockchain offers efficiency and scalability, but only when you're not making these enormous sacrifices that most of the space is made in the name of decentralization. So overall, I think this is a very positive development for our thesis. I think we're becoming less contrarian over time as the space kind of catches up to how we're thinking about the technology, which is very, very welcome, of course. Like I mentioned earlier, if this topic interests you, I would definitely recommend checking out our coordinated law enforcement action send BTC to zero piece, or the fireside chat that Zach and I did at the first Unbounded Capital Summit in New York, which is on our YouTube or in our resources on our website. So this happened a few weeks ago. What do we look for now? CZ's sentencing is currently scheduled for February 23rd of 2024. That could be delayed. I think it likely would be delayed, but something in early 2024. It'll be interesting to see what happens with CZ personally. The more relevant thing for blockchain and cryptocurrency investors, I think, is monitoring the key metrics on Binance once this increased scrutiny from the independent compliance monitor takes effect. It's hard to say. There's not like a date that starts. The clock started 2 weeks ago. There was 30 days now Binance has to propose possible compliance monitors, and then the government can approve or deny. So there's going to be several kind of back and forth processes which are lined out, but it'll be sometime in Q1 or Q2 of 2024 when we'll start to see what does post-compliant Binance look like. The developments with other key players in the kind of Wild West crypto space, namely Tether, I think will be very interesting. The CZ going to be, basically a government asset in providing information on these players, if there's information to provide. And then what type of information will come of all this retroactive review of Binance and also kind of Tether indirectly. And then the potential for new charges against Binance. So, like I said, the settlement isn't a get out of jail free card. There could be other crimes. There could be embezzlement. There could be commingling of user funds and corporate funds, all sorts of other crimes which weren't covered in the plea agreements. So does the independent compliance monitor bring information that leads to other charges? That also kind of remains to be seen.